was just about ready to leave for the night. It's getting kind of late. Everybody's going to sleep. So, what is it that I can help you with before I go? You want me to help you figure out your net worth? Okay, well, have you been watching my episodes? Because I have plenty of episodes that teach people how they can figure out their net worth. So, what makes you want to do it at this hour? I don't understand. Okay, you have to know right away. Alright, well, I guess I can help you. Did you ever send that spreadsheet to me so I can figure it out? Oh, you did? Okay. Let me double check and see if it's here. Did you send it to evanthomasbroke@yahoo.com? Okay, wait, hold on. When did you send it? Oh, wait, yeah, I see it. It is here. I haven't had a chance to look at it, but I guess I can do that right now. But like I said, it is getting late. And people are starting to go to sleep. But seeing as it's an emergency for you, then I can definitely help you out. Okay, so do you know how to figure out a net worth? Not really. Okay. Well, did you give me your assets? Because that's number one. We have to know what your assets are. Okay, so you gave me your assets. And then I'd also need to know your liabilities. Your liabilities. Your liabilities. Yeah, most people have more liabilities than they do assets. Is that you? No. Okay, that's good. That's good, that's good, that's good. That's good, that's good, that's good. That's good, that's good, that's good. Okay, well, I am going to measure you for financial success. But first, hold on, wait. Shh. I'm gonna need something to measure you. I didn't know you were coming, so hold on, I'm not really very well prepared. But just relax. Okay, here we go. So, yeah, this is what I use to measure people, so I just need to get a few, physical measurements here, and then I'm going to compare them to the numbers I see, and that way we'll be able to know if you're lying or not. Yeah, I mean, you really shouldn't lie, right? No, not at all. Okay, so let's see. Hold on, just move in a little bit closer, if you don't mind. Hold on a second. Yeah, I'm sorry, it's a little kind of awkward, but I just need to get a measurement here. Sorry, shh. Sometimes this sticks a little bit, I'm not sure why. It means if you had two numbers, let's say you had 50. Okay, picture that right now. The number 50 and the number 25. If you add 50 and 25, what do you get? Very good, you get 75. But what if I told you that the 25 was a negative 25? What would your answer be? 25, very good, very good. But what if the 50 was a negative number? Then what would you get? Yes, a negative 25, because you subtract them, but then you take the larger integer as either positive or negative, right? So that's how you get to your net worth, because of course on one hand, like over here, you're going to have your assets, right? Assets over here, let's say. Then you've got your liabilities over here, let's say, right? So you have assets. If those are higher than your liabilities, then it's going to be what? A positive number as a net worth, but it would be a negative net worth if your liabilities over here was larger, which you do not want, right? Okay. Alright, so I'm excited to look at your numbers here. I just wish you would have come in a little bit earlier, yeah, because people are trying to sleep. So, but yeah, let's take a look at what you've got. Okay, so I'm seeing a bunch of numbers here. Are these your latest numbers? Yeah, because the market went down just a little bit, didn't it? Yeah, not to worry though. Let's see what you've got going on here. You know what? These numbers look very similar. Yeah, well, we'll wait till we get to the end here. I don't know why, but they look super similar. Okay, so it looks like, wait, I have to finish measuring you before I look at those numbers. I'm so sorry, I forgot. So I got this measurement here, right? Yeah, let me go back. I'm sorry, I'm kind of new at this. I got a little sidetracked, but that's okay. You're probably sleeping anyway, it doesn't matter. Okay, the first number that we had when I was doing the over here, it was like, okay, I got that number. I need to get another number over here. Hold on. Like that. Can you wake up? Sorry, just, can you come a little bit closer though? Alright, hold on. Yeah, hold on. Okay, wait, hold it. Hold it right there. Like, breathe in. Yeah, suck it in a little bit. Okay, wait, hold on. Okay, hold on. Oh, I got it. Got it. Okay, hold on. Okay. Let's see, hold on. I wasn't expecting that. That was a very large number, but at least it's on the asset side, so hold on. I'll just bring it down to decimal, decimal, yeah. So 22. I was gonna say decibel. That's more like sound stuff, I think, right? Decibels and stuff. This is a decimal. So got that number. Yeah, hold on. Just thank you for being patient with me. Yeah. Come in closer. Well, this is a diagonal number. Okay, wait. Shh. just a few minutes, okay? Now that I've got those numbers, hold on, wait just a second. It seems to be getting a little darker. I don't understand why. Well, it is getting later, so shh, just relax. Okay. Alright, so I've got those measurements there. Again, before I look at these numbers, do you mind? Can I look in your wallet? Okay, hold on. Thank you. Yeah, I just have to, that's a very nice wallet, by the way. Come to think of it, did we not do this before? I remember this wallet. I seem to recall you had some money in here. What was it about? I think you had $80. Yeah. Oh, it's just a sampling, I like to look at, cash for my clients just to make sure that they have some cash presence or some positions in cash, not just in your portfolio, but, in your wallet. So, hold on. There we go. My light seems to has a life of its own, I guess. But anyway, looks like we've got 20, 21, 22, and 5. What's 22 and 5? 27, yeah. 27, so. Now this was the same 20 we had before, like 8 months ago or something. Yeah, last May, I think it was. May, June, July, August, September, October. June, July, August, September, October, November, December, January. It's been like 8 or 9 months or something, but is this the same 20 you had before in your wallet? Yes, I can tell, actually. Yeah. That's the same 20, but you had $60 more. Now you only have 6. What happened to the other? Well, wait a minute. If you had 80, and now you've got 27. What happened to the other $60? Did you spend it? Okay. All right. Well, no worries. Let me just put this back. And do you have any debt on these credit cards? Because I'm seeing some credit cards in here. Is there debt on those cards? Yeah. Not much. Okay. Oh, you pay it all off. That's great. That's good that you do that. Okay. All right. Well, now that we've done this, let's concentrate on the email that you sent to me. Just want to make sure. And you said these are the latest numbers, is that right? Okay. All right, very good. So, I like how you broke this down. You've got your assets on the left, and apparently these are your accounts that you have. And then it looks like you've got a total. I'm not showing any debt anywhere. Do you not have any debt? No. Okay, well, very good. You pay off those cards every month. Okay, what about mortgage debt? No, you pay that off too. Well, good for you. That's very, very good. You must be watching the show. Yeah. Anyway, so it looks like you have a Vanguard taxable account, and that total right now is $191,226. $191,226. Very good. Oh wait, $191,226, I should say. Yeah, that's a big number. Good for you. That's a taxable account. You also have a Roth IRA at Vanguard. That total right now is $199,560. $199,000. So let's add that. 199,560. Okay, and you have another Roth at Fidelity. The Fidelity Roth is 229,821. And you have a Fidelity traditional IRA. Did you maybe liquidate a 401k? Oh, because you retired. Okay, so you took the pre-tax portion and opened up an IRA, and the post-tax and opened up a Roth IRA. I see. That sounds like a really good plan. So, in your Roth position right now is roughly $430,000. Are you going to be using that Roth IRA for income in retirement coming up sometime soon? In about a year, maybe 2 years. Okay. All right. So that's quite a bit of money in after-tax dollars. That's really good. What's your asset allocation? 50-50 in one Roth that you're going to use first, and the second Roth at Fidelity is 60-40 because you don't need to touch that for 6 years. Taking more risk there. Very good. And then again, you have a Fidelity traditional IRA, 600,000 in that one, 602,000, almost 603 in that account. I see. And you have a health savings account, 55, almost 56,000. I see that it was 60,000 a little while ago, but the market went down. Is that all stocks? Yeah. And your Fidelity traditional IRA, 85% stocks, 15% bonds. Now, why is that? Oh, okay, because you don't need that money for 15 years. Okay, that's smart. Did you talk to Fidelity about that and Vanguard? Did they agree? Okay, very good, very good, very good. And I see you have an I bond as well of 20,000. So your assets right now is about 1.3 million if we add all those up. Okay, so actually it's 1,299,202 right now. Now that's right now. That could change obviously if the market goes up or down, but that's awesome. Now we have nothing to subtract, do we? Because you don't have any liabilities. You're doing really great. Now, I see on the right side of your spreadsheet, though, you have short-term reserves, savings. That's like CDs and such, right? So that, right now, that's, let's see, 30,053 plus 59. 153 plus 34, 120 plus 29,969. 153,000, almost 100 and, well, $153,300 in short-term reserves. Did you just retire recently? Because that's a lot of cash. Yeah. Okay. You're going to use that for down markets in the future, and maybe for 2025 is already, wait. I see a note that you have on the right. Okay, so that 29,000 in your online savings account, because that's the most liquid of all. That's after you paid off a Chase credit card that you were carrying from 2024. And you have a note that says your online savings is forecasted to be $3,500 at the end of 2025. Is that right? Okay. And because you're taking out, you're putting 2025 expenses like groceries and fun and gas on your credit card at 0%. That's good. So after you pay that taxes of $1,200, and you may have a special assessment at your condo community of $500, and you may take a trip in July for about $1,000. Okay, so if we take, well, let's just take 30,053 plus 59,153 plus 34,120. But now for your online savings, I'm just going to add 3,500. Okay, so at the end of 2025, you should have 127,000 in that account. So let's do your net worth, starting with your short-term reserves of 127,000, because we're really taking away what you earmarked in cash, because I want to get more of a holistic view of what that account will be. The other accounts may be going up or down as we go throughout the rest of 2025, but just to get a benchmark for right now, 127 in short-term reserve plus 1.3 million in equities and bonds invested in the stock market in various vehicles, plus I see you have a condo. What is the value of the condo right now? 190. It went up. Okay, 190. So if I add 190, your net worth right now, after we take out money that is earmarked for 2025 in cash, is about 1.6 million, 1,617,000. So let me see if that matches. Remember, all of these numbers as well. Wait, what's that? You've got more cash. How much? Oh my goodness, you should have told me that before. Why is it not on your spreadsheet? Oh, because it's in this little purse. This little change purse. Shh. People are sleeping right now. You have to be quiet. Shh. Alright, well, you should have told me about this. Well, you know, most of the time as a money coach, people tell me later that they have debt. They don't tell me they have more assets, though. So that's interesting. But do you know how much money is in this little purse? You do? Okay, let's take a look. Oh, you wrote it down. Okay, let's just set this down. Okay, so you've got 28 quarters, 71 dimes, 68 nickels, and 166 pennies. That sounds real familiar. It used to be $19.16. It looks like you added some cash. Now you've got just under $20, $19.78 we need to add to your balance sheet. Okay, so here's the question of the day. Would this be added on the asset side or your liability side? Good answer. It would be over here on your asset side. So you actually have, let me put this back in here. Sorry. Did I give you your wallet back? Yeah. And I'm going to, well, I'll leave your cash right here. Okay, so that is awesome, but let me see as we end this session. It did match, actually, so those numbers I had before from measuring you, like this, those do match. So thank you that you are not fibbing, you are not telling me a little white lie. All of your numbers are exactly what you told me they would be, and in fact, these numbers look a lot like mine. How is that? That's so strange. So, wow. appreciate it. Now